Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have an edition of Bitcoin Bytes for you. Today is November the 10th, 2022, and we're going to go through some charts. We're going to do it very quickly. Before I jump into the content for the video, please do me a huge favor, hit the thumbs up button, subscribe to the channel if you have not already, and of course make sure you check the description. There will be links down there where you can join my paid training programs as well as my proprietary software. I believe both of those will help to make you a better trader. So Bitcoin has had a pretty interesting couple of days. There's absolutely been some whiplash in the market. And as usual, I think a lot of people were caught off guard. And a couple of videos ago, I talked about the fact that there were people on Twitter saying the bottom was in, calling for 70,000, 100,000, $150,000 Bitcoin, etc. I expressed my opinion that the bottom was not in and that we needed some type of capitulation event to mark a bottom. Well, obviously, that video was spot on. The bottom was not in, and we had this horrific meltdown over the last couple of days. For those of you that are not keeping up with the percents, in roughly 2 days' time, Bitcoin fell over 24%, and over the course of about 5 days, it fell almost 28%. That would be a capitulation type event. So, am I saying the bottom is in? No. But I am going to show you some different possibilities that you need to keep an eye on. All right, so first things first is the bottom end. That is an impossible question to accurately answer until we have more information. It is entirely possible that this does end up being an accumulation range and that this event that sent this down to $15,500 does end up becoming what's known as a wick-off spring, which actually is a buying opportunity before the next bull market kicks off. It is possible, all right, especially if we go look at a total market cap chart. It's going to be even more possible on this particular chart. So look at total market cap here. All right, so I've mocked this up a bit. You can see this huge spike in volume. Remember in that video maybe about a week ago, I said we do not have a huge capitulation type of candle yet where there's tons and tons of volume, people being washed out of the market. Well, guess what? Now we do, right? We do not have a huge tail being left behind. Guess what? We are getting a tail that's forming right now. Whether or not it remains, the candle hasn't closed yet, we'll have to wait and see. But there's some things about this chart that you do need to be aware of. Again, volume being a big thing to keep an eye on because that does look like some type of capitulation volume. The other thing is parabolic moves, which is what the move was from 2020 to 2021. They tend to retrace about 80%. Guess what? 80% level is right about 685 billion. This candle actually fell all the way down to about 736, so very close to that 80% retracement level. Guess what else happened? That was actually testing the previous all-time high from January of 2018. Now remember, this is not Bitcoin, this is all cryptocurrency, total market cap. So while Bitcoin went well below its previous all-time high, total market cap actually stopped right there. And so this is going to be very interesting to watch. Now, me personally, just going to put it out there, and I talked about this in my Discord yesterday before the market pumped. What I think it's setting up for is I think it's setting up for one hell of a dead cat bounce or a bear market rally that is going to catch a lot of people off guard. I think it's entirely possible we get a very strong rally that completely smashes bears and then gets bulls funneling back in before the market finally enters that last leg down. And if you want to, talk about crypto as a whole, it is not uncommon at all to get 75% and even 100% bear market rallies. We got one back here in February of 2018. You can see this rally was about 98%. This rally here in March of that year was also about 97%. So really big rallies happen in bear markets when the market gets too far off sides. And I do think that over the last couple of days, Bitcoin got a little overexcited, a little overly nervous about the FTX news and everything else going on. And it's entirely possible that it now will have some kind of dead cat bounce. Also, keep in mind that if you were looking at a bigger chart, like a stock market chart, like the SPX, for example, this is the S&P 500. This is on a 3-month chart, so every candlestick is 3 months. Well, this certainly does not look good. This looks like a base back here, and this looks like your typical, bubble chart is what this looks like. And it could be that this is just now entering its complacency phase. Well, complacency bounce tends to be pretty strong. Again, if stocks are moving up, that tends to, kind of boost your Bitcoin with it. Unfortunately, if that is what this is, we all know what comes after complacency is you get your complacency, and then you start your actual markdown phase of your bear market, which means that if Bitcoin follows this up, if this doesn't bring complacency bounce, there will be more downside after the bounce. So just something to keep in mind. Before we can start talking about these great big bear market rallies and these big bear market bounces, we first need to get through this zone here. This was previously our support, or what I like to call the demand zone. Unfortunately, we did lose it, or Bitcoin did lose it, and now it is being retested from the underside, which basic technical analysis says that once you break through demand, it flips to supply. Everybody who was buying through here thinking it was going up, now they're just wanting to sell and get out for even and try to get their money back. So we'll have to see whether or not there's enough buying pressure to absorb that supply. If there is, it will move up. If not, this will just be one of those little fizzled out rallies that just continues to move down from here. One thing you really need to keep an eye on is the fact that volume is not supporting this move up, especially in the stock market. Let's jump back over to stocks. We can take a look at US 100. Had a banner day today, moved up about 7 or 8%, which is an absolutely massive day in the stock market. There's just one problem. Put the volume on, well, there's probably multiple problems, but one of the most obvious problems, put volume on this chart and it's not going to look the way it should look. See this? You have massive, massive, massive volume and nothing. If this was a true bull market move, if this was truly a new bull market and the bottom was in and all that, you should see a massive green buying candle like back here. Instead, we have this very, very tame volume. That's on the US 100. If we look at the US 500, we're seeing the same thing down there, right? No real volume. And if we look at the US 30, we're going to see, again, the very same thing. Where is the volume? That is my question. If this is a legitimate move up, we should be seeing more volume. That makes me a bit skeptical. Also, taking a look at some bigger time frame stuff, if you look over at the dollar index, the DXY, what you're going to see is the DXY actually had this massive move up over the last few months, really the last 12 months, I guess, and it really just went too far, too fast. So from May of last year until it peaked, it moved up about, get out of the way, trading view, 28%. All right. So obviously it's due for some type of correction, and it looks like we're getting some type of correction at this point. So it very well could be that this move up in stocks is really just people moving away from the dollar, moving into equities, and then they'll move back into the dollar once those equities, move up a bit and they start taking their profits back out. So that's something to keep an eye on. Another thing to keep an eye on is this chart here. If you're not familiar with this chart, it is a very simple chart. It is the NASDAQ versus gold. And what you're seeing is the dot-com bubble. At that point, the NASDAQ was worth about 17 ounces of gold, whereas right now it's worth a little over 6.5 ounces of gold. Well, that's a really big problem. This chart might look somewhat familiar to you if you've been in cryptocurrency for a while, because guess what? It looks just like Bitcoin looked way back in 2019. So we put Bitcoin on here, put a weekly chart, Bitcoin, USD, get these side by side. So there is your current NASDAQ market versus gold. And there was Bitcoin versus the US dollar. Had that dead cat bounce and then moved down another 70% from there. So from the top in 2019 to that bottom was about 72% down, came back and retested this accumulation range before we got our bull market. So if the NASDAQ was to play out in the same fashion versus gold, it could potentially move all the way back down to this accumulation range, which would be a huge drop. From where it's at right now, it'd be a drop of about 70% or so. And of course, because Bitcoin is highly correlated to the tech stocks, that means that if that happens, it's extremely likely that Bitcoin is going to suffer the same fate and probably have some kind of cataclysmic move down. So those are all things that you're going to want to keep an eye on. If you are bullish on Bitcoin, or you want to be bullish on Bitcoin, you need to also be rooting for the NASDAQ to regain its legs and start taking out these previous highs versus gold. Because what this is really saying is people feel better about being in gold than they feel about being in the tech stocks. Finally, if we take a look at Bitcoin versus gold, we can see pretty much a similar story. It's broken down versus gold. Gold has been a better investment over the last year or so. It is now retesting these summer 2019 highs, and so we may get some type of bounce off that level. Again, it would be completely normal to have this bounce back up and retest some of these old areas of demand, again, dead cat bounce type of stuff, and then finally get that final move down. So keep an eye out for that. We'll put a volume profile in here real quick, and it'll make it easy to see. right down there is kind of that point of control that it's very likely to be retested at some point in the future. As far as the weekly chart of Bitcoin goes, it was pretty interesting to see that 19-week moving average that I've been talking about for several years now, it did actually come into play. You can see here that I said, once we retested that, that'd be a place that would more than likely be a good place to look for shorts. That's exactly what happened. It retested it and then boom, dumped about 20-25%. So that did exactly what you would expect it to do. Also, the 3-day chart, that funny little box that I used to talk about all the time in 2019, I used to call it the bear market box. It once again came into play. If you look at this RSI box, you're going to see, I'm going to turn these, well, we can leave the lines on there, it's fine. But you're going to see that it came up, tested the top of that box, and then just capitulated down about 25%. So funny how that simple stuff still works, even though people try to tell me, you can't do that. That's not how it works. Absolutely how it works. You can use support and resistance on RSI or any other indicator, or most any other indicator, just like you can price. If you take a look at this measure move down, again, I'm moving fairly quickly here, but trying to cover a lot. That measure move down, there's your first leg, there is your pullback, and your target there is going to be down around $12,173. It is moving steadily toward that target. So eventually, I do believe that will be hit, regardless of what happens. I am still looking for that level. Again, a lot can change. That doesn't mean that a week from now, I won't have a different opinion. One thing about trading is you can only make decisions and make predictions based on the information you have available to you at that time. Based on the information I have available right now, I still believe this is fully in bear market territory. I still believe we're going lower. But again, this could very well develop into some type of wick-off spring. If it starts breaking north of this range, then I'll have to reevaluate and decide whether it's going to be a dead cat bounce, back up to testing these old levels, or whether it's actually more than that, where we need to start talking about looking for longer term investments. And when I say we, of course, I'm talking about me. You do whatever you feel is necessary for your own financial well-being. All right, so there's a bunch of Bitcoin charts. There is some stock charts. There is some Bitcoin versus gold, some stocks versus gold. And of course, I guess we'll finish up with one last chart, and we'll just go ahead and look at the good old market cycle chart. So we'll go market cycle. This is Bitcoin versus the QQQ, which of course measures Bitcoin's strength or relative strength versus other tech stocks. We can see that very simple technical analysis works here. It came up, it tested its 200-week EMA, not a regular moving average, but an exponential moving average, and then absolutely fell out of the bed. So this is moving down exactly like you would expect it to. Now, one thing I did notice, it was actually a friend of mine said something that made me look back at this. He was complaining about the government, or mentioning that the government should have stopped this from happening. He's fairly new to trading, and it kind of made me chuckle because I thought, gosh, that is literally what this cheat sheet says, that when you're in the anger phase, people will start asking, why did the government allow this to happen? And so one theory that I put out on my Discord yesterday before this pump was, maybe this is not denial at all. Maybe this back here was actually the panic and capitulation phase, and that we're just now kind of reaching the bottom of that. And that it is possible that this through here, boom, right, boom, 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 this may actually be anger right here. It is possible. I don't know that I'm leaning that way just yet, but it is possible this is actually anger, which would be this point on this chart. Again, that would mean that we have a pump to come, which makes sense with what's happening. And then the final leg down, which takes us over here. By the way, it doesn't really matter whether this is denial or whether this is anxiety or whether this is anger. It's just kind of a nice, pretty picture to kind of go off of, regardless of whether it's, denial, anger, anxiety. It doesn't change the overall target, which is going to be down somewhere in this box. Hopefully not below, but it depends on how bad things get, right? This box is still where I'm kind of looking for Bitcoin versus the QQQ. How it gets there, I don't particularly care, but it would make sense to get some kind of bounce here. We really haven't had any strong rallies along this whole way, going all the way back to March. It's just been down, down, down. And it's really unusual for a market to just move in one direction without any pushback from the other side. It's probably because people are overly pessimistic because of the interest rates and the stock market. And so I think it's probably stopped those rallies from happening. But it would not surprise me to get some type of bear market rally. I know that the CPI data came out today. It was very high, but it was a little bit lower than what people were expecting. And I think that this pump that we're currently seeing is really just an overreaction to that news. I mean, people are going, oh, it's only 7.7%. That is still absolutely horrific, right? It's still terrible. Sure, it's not as bad as that. I think they're calling for 7.9. Okay, it's still terrible, all right? We have not seen the full effects of the last 24 months yet, in my opinion. And so I think as things become more clear, eventually the market will continue to move down. Also keep in mind that FTX right now, it's kind of in limbo. I don't have any inside information, obviously, but from what I'm reading on Twitter, there's some kind of buyout that may be happening, et cetera, et cetera. I know that Sam came out and said that FTX.US is perfectly fine and nothing's wrong, that it wasn't impacted. You can trust him if you choose to. All I know is he was saying something very similar the day before or 2 days before FTX International paused withdrawals. So me personally, I took all of my money. I think I left like $10 on FTX just because it was in I think I had like $10 worth of link or something that I had bought. I bought one link, I don't know, a year ago, 6 months ago or something. And I was using that to make sure that I was getting the interest that I was supposed to be getting on that earnings feature they have. And it was easy because it was one, so I could make sure it was actually growing without having to do a bunch of math and stuff. I just left it there because I don't care about it. But yeah, I took all of my Bitcoin off of there. I took all of my altcoins that I'm still holding off of there. And yes, I know some of you are like, wait a minute, you're holding alts and Bitcoin? Yeah, I've always maintained that I keep a little bit of crypto just in case I'm wrong. And so far, that decision has been very, very painful because I've lost a lot of money on that little bit of crypto. But it is what it is. I'm not arrogant. I'm not conceited enough to think that I know 100% what's going to happen. And so I did keep it just in case. And mainly just in case I was wrong about the store of value aspect. I thought, if, all hell breaks loose and the dollar completely capitulates and just falls to pieces, I have some gold, I have some silver, and I thought, I should probably have some cryptocurrency too, just in case the Bitcoin bulls are right and this ends up being a hedge against inflation, which I never believed it would. So I kept a very small amount, but I do still have it. And I plan on holding that for many, many years to come or writing it to zero, whatever happens. So, I don't hate Bitcoin. I'm not rooting for it to go to zero or anything like that. I'm just looking at the technical analysis. It could easily be a stock that I'm looking at. I don't particularly care what it is. It's just TA, and that's what I'm seeing in the charts for right now. If it starts to go back up from here, wonderful. I'd be happy to look at buying more. The charts dictated that. If it goes down from here, that's fine too. If it goes low and starts to accumulate, then I'll look at buying there. It's all the same to me. I really don't care. So that's all I have to say. One thing I will say is if you missed this move or if you've lost money on this move and you're still struggling with trading, again, there are links down in the description. You can join my paid trading course, and I will do my very best to teach you to trade. You can also get access to my proprietary software. And just to give you a heads up of how that software performed during this move, we can take a look at this chart of Bitcoin and see pretty easily that if you have been using this indicator over the last week or so, I think you'd have been pretty happy. Signaled that sell way up here around 21,000 or so, got thrown off a little bit by this buy signal, but then right back into a sell and then dump. All right, so pretty simple stuff. And it was kind of fun. I went and looked at the FTT token just to see if it caught it, and it did indeed catch it as well. It would have been having you sell way up here around 22 bucks before it fell all the way down to $1.28. So again, you can get access to that indicator as well as my training and also a few other indicators that I've coded as well down in the description of this video. With all that being said, please remember I am some guy sitting in a spare bedroom, and that means that obviously nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense, reminding you all to please trade safe.